Well, it's Fed time once again, where the Federal Reserve is going to meet this week to tell us what they're going to do with rates. So what we're going to talk about next is what we think is going to happen, and then also the economic data leading up to the announcement on how that might play a role in the markets. So my name is Dan Frio. I do this report on a daily basis to keep you guys informed on what the heck's going on with real estate. I also decided to change up my show a little bit. So instead of the daily humdrum economic data, what I'm going to do is on Mondays, I'm going to come out and give you the economic calendar for the week. Then on Friday, we're going to analyze that data, how it came in and how it played a role in real estate. So that's what we're going to do on Mondays and Fridays. On Tuesdays, I'm going to give you guys Tip Tuesday. For example, like tomorrow, we're going to talk about credit scores. Where do you go to find the credit score that lenders use when they're trying to analyze you to get pre-qualified for a home? So I'm going to go over tools like, what best sites to go to for to analyze your credit. What should you do if you're looking for maybe to get a quote on insurance and things like that. Wednesdays, we partnered up with Kyle Seagraves of Win the House You Love. We're going to do live events Wednesday evenings to answer any questions that you guys might have live. And then on Thursdays, I'm going to give basically educational videos on that day to give you guys, what programs are out there that might benefit you in your particular situation if you're looking to buy a house in 2023. So without further ado, though, let's get over to the news that we have this week. So here's the top 6 products people use when they're buying their first house. But the main thing in today's calendar is what in the world is the Federal Reserve going to do at this week's meeting? Because they're coming out in 2 days and 3 hours and letting us know exactly what they're going to do. How do I know that? Well, it's right here behind me. The CME FedWatch tool is what we're looking at right now. What is this? Well, it's the likelihood the Federal Reserve will change their federal funds target rate at the next meeting. Right now, the federal funds target rate is 5.25 to 5.5. So if you scroll down through this chart, you can see right over here. Let me get my head out of the way here for a second. You can see right here, there is a 98% chance that they're not going to do anything. Actually, if you go back through the charts or probability indexes right through here, everybody keeps telling us the Federal Reserve is going to raise rates one more time. Well, fortunately for us, if you go down through here, it really doesn't look like any time duration where they're going to come out and increase rates because, again, we're right here at 5.25 to 5.5. To move to the 1, if they increase rates, we'd be at 5.5, 5.75. And there's really nothing even over basically 30% that tells us that. Everything basically says the Federal Reserve is done hiking rates, and their next move is basically at the middle of next year, they're going to start pivoting and start reducing rates. Okay, so what actually plays a role in what the Federal Reserve is going to do? Well, that brings us to the economic calendar. So we're going to do, like I said, on a daily basis or on Mondays, we're going to go through what the numbers look like for the economic data for the week, what the analysts are saying, and then I'll give you my projection. And then on Friday, we're going to check on how we all did. So right now there's no news out on Monday. On Tuesday, we have the Consumer Confidence Index, and I'm going to have to agree with them on this. It is plummeting and it is falling off the charts. Last reading was 105. It was way above there last time, and it continues to drop and drop and drop. People's confidence in the economy is dismal at this point, and I'm going to have to agree with them on that. The next thing is we see ADP payroll numbers. ADP changed their metrics about 6 or 8 months ago, and they're still doing a pretty dismal job at this. So right now they're saying they came in previously, there was 89,000 new jobs added. They're expecting that to jump all the way up to 150, almost double what they came in at. But I'm really not going to put much context into this because they really don't have a good track record on that. So we're going to skip that right now. Manufacturing numbers, those continue to drop as we're seeing less and less manufacturing needed because the Federal Reserve is trying to reduce or help people not spend as much money. So we're going to pass through that as well. Then there comes the JOLT index. Now here starts to come the juicy information that the Federal Reserve monitors. The Federal Reserve basically wants more and more people not working, and because of that, they won't be able to spend, thus bringing down inflation. I sound like a repeat record every day that I say that, but people continue to spend. What I want you guys to understand is the JOLT index is how many job openings there is. There was a reading about 6 months ago. This number was about 11 million. 11 million. Well, it's came down to 9.6, and they expected to drop even further down to 9.2. I'm going to go on this bandwagon because I don't think a lot of manufacturers and a lot of companies right now are hiring. From everybody I'm talking to, they're at status quo or they're letting people go. So I'm going to go with that as well. Federal Reserve, what they're going to do with interest rates, I'm going to say exactly the same thing. A previously reading was 5.5 on the federal funds rate. It's expected to stay there, and I'm on that bandwagon as well. Then we got the initial jobless claims. This one is a crapshoot, unfortunately. There's not a lot of metrics that we can follow with this. All I see is, based on a lot of the information I follow, I'm going to say the initial jobless claims are going to kind of stay steady right now. We have I think we had some good news with the United Auto Workers. I think there was a deal just made there, and a lot of this striking, the unions on strike right now, they're actually starting to settle on a lot of these events. So I don't think the initial jobless claims are really going to come down off of that. Now, average hourly earnings, how much people make on a continued basis, how much is your income gone up a little bit or gone down a little bit? Well, this number is going to continue to uptick a little bit. The reason being is, as these unions settle, they're getting more and more money for their employees. So our average hourly earnings are going to uptick a little bit because of a lot of this. Just think of the pilots just a couple months ago, they got a 40% increase in their wages. So that's going to trickle through all the economy, and that's going to trickle up these numbers. Then we get the government numbers, non-farm payroll. The last reading was 336. This is another number where I'm actually going to say this is going to come down, but it's not going to come down all the way to 188. I'm going to say it's in the 200 range. We'll see how I do on Friday with that. Unemployment rate, I'm saying is going to stay sticky at 3.8, which all the analysts are saying is well there. And then that is basically it for the week. So based on the information we have today, which is basically nothing, let's go over to the bond market and see what's happening there. Well, the bonds are basically flat. You can see right through here. The MBS markets, I'll take a -8 as basically being a nothing, and the 10-year Treasury is basically flat. There's no news out there. So let's get over to the stock market. We'll check out CNBC and see what's happening in the stock market. Wow. The Dow Jones is up almost 300 points. S&P's up almost a little over 0.5%. And the NASDAQ is almost up 1%. NASDAQ and all these indexes just last Friday hit a correction mode. So a lot of these went into correction mode. Oh, you can see that right here, mirrored in a correction. So a lot of these were in correction mode, and now they're starting to come back a little bit. Guys, here's what I'm doing personally. I'm taking a little bit of my money off the table when it comes to investments. I'm not an investment advisor. Please don't trade off of my analysis. But what I'm explaining to you guys is, I think what the Federal Reserve is doing, there's going to be a lot of cracks in the foundation, and a lot of manufacturers and a lot of companies aren't going to be able to continue to pass on these higher costs to us, the consumer. And you're going to start seeing some cracks in the foundation, and a lot of companies' earnings in the next couple quarters starting to come down, not meeting basically the book numbers on what you're seeing in the stocks. So I've taken some of my positions off the table, put my money into fixed assets like short-term maturities, such as money markets, CDs, and things like that, to grab those juicy yields that we're seeing right now in today's market. So that all being said, that there's really no economic news today and the markets are flat when it comes to rates, is if you're out there and you're like, hey, Dan, what do you think is going to happen with housing? And do you think it's a good time to buy right now? Well, I'm not the person to judge on that one. Only it's you. So all I ask you is, don't put yourself in a position where you don't think you might qualify. Please reach out to us. I always say, don't disqualify yourself. Reach out to us, because maybe the income that you make is sufficient enough to buy that first house. Maybe your credit isn't as bad as you thought it was. Maybe you don't need as much money down as you might have thought. So if you have questions in regards to buying your first house, please visit us at therateupdate.com. Again, my name is Dan Frio. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. We'd love to help you. How do you apply with us? Well, there's a couple different ways. One, you can hit the apply now button right through there. It's going to give you a little bit something different than most companies do. We're going to actually ask you a few questions. Based on the answers to those questions, we're going to assign you to a specialist on our team to help you in your particular situation. But if you're like, Dan, can I just call in or can I just email you? Absolutely, you can. What you need to do is just scroll down to the bottom. You're going to pass a bunch of blogs, a bunch of information, mortgage calculators, and thus. And then when you get to the bottom right here, you're going to find that information on how to reach us. You can give us a call, 844-775-5626, or you can email me personally at dan@therateupdate.com. Thanks so much for watching, guys. God bless. Have a fantastic day. See you tomorrow. Bye-bye.